Impairment. Perform a recoverability test. Estimate the future cash flows expected from use of the asset and its eventual disposal. If the sum of the expected future net cash flows undiscounted is less, then the carrying amount of the asset the company measures and recognizes an impairment loss. To measure the impairment, the company uses the fair value test. This test measures the impairment loss by comparing the asset's fair value with its carrying amount. The impairment loss is the carrying amount of the asset less the fair value of the impaired asset. As with other impairments, the loss of the limited life intangible is reported as part of income from continuing operations. The loss is generally reported in the other expenses and losses section of the income statement. To illustrate, assume that Lurch Incorporated has a patent on how to extract oil from shale rock. Unfortunately, several recent shale oil discoveries adversely affected the demand for shale oil technology. Thus, the patent has provided little income to date. As a result, Lurch performs a recoverability test and finds that the expected future net cash flows from this patent are $35 million. The patent has a carrying amount of $60 million because the affected future net cash flows of $35 million are less than the carrying amount of $60 million. Lurch must determine an impairment loss, discounting the expected future net cash flows at its market rate of interest. Wait, what? Oh. So you find that the fair value of its patent is $20 million. So carrying amount minus fair value equals loss on impairment. Record loss on impairment and decrease the patents by $40 million. $40 million. After recognizing the impairment, the reduced carrying amount of the patents is its new cost basis. Lurch should the basic Lurch should amortize the patent's new cost over its remaining useful life or legal life, whichever is shorter, even if shale oil prices increase in subsequent periods and the value of the patent decreases. Lurch may not recognize restoration of the previously recognized impairment loss. Impairment of indefinite life intangibles other good will. How far? 24. Page 24. Should companies attest to indefinite life intangibles and get goodwill for impairment at least annually? Do not test it for goodwill, apparently. The impairment test for an indefinite life intangible asset other than goodwill is a fair value test. So, you do a fair value test for an indefinite life intangible asset. This test compares the fair value of the intangible asset with the asset's carrying amount. If the fair value is less than the carrying amount, the company recognizes an impairment. They use this one-step test because many indefinite life assets easily meet the recoverability test. Because cash flows may extend many years into the future, thus companies do not use the recoverability test for indefinite life intangibles. To illustrate, assume that they purchased a broadcast license for $2 million. This license is renewable every 10 years if the company provides appropriate service. And does not violate Federal Communications Commission rules. Archon Radio has renewed the license with the FCC twice at minimal cost. Because it expects cash flows to last indefinitely, Archon records the license as an indefinite life intangible asset. Recently, The FCC decided to auction significantly more of these licenses. As a result, Archon Radio expects reduced cash flows for the remaining 2 years of its existing license. Archon performs a fair value test for this indefinite life intangible and determines that the fair value is $1.5 billion. So there's a fair loss of $500,000. Now you report the license at $1.5 billion and its fair value if the value of the license increases in the remaining 2 years. Archon may not restore the previously recognized impairment loss. Companies have an option. That was funny. Companies have the option to perform a qualitative assessment. You have the option to perform a qualitative assessment, or they refer to it as an optional qualitative assessment. So they have the optional, they can do an optional qualitative assessment to determine whether it is more likely than not, i.e. a likelihood of more than 50%, that an indefinite life intangible asset is impaired. If the optional qualitative assessment indicates that the fair value of the reporting unit is more likely than not to be greater than the carrying value. So therefore it's not impaired, the company need not continue with the fair value test. As a result, use of the optional qualitative assessment should reduce both the cost and complexity of performing the impairment test. Impairment of goodwill. Goodwill must be tested for impairment at least annually. What? They just said not goodwill. Okay, never mind. The impairment rule for goodwill is a fair value quantitative test. A company compares the fair value of the reporting unit to its carrying amount, including goodwill. Illustrates. Colby Corporation has 3 divisions. It purchased one division, Print Products, 4 years ago for $2 million. Unfortunately, Print experienced operating losses over the last 3 quarters. Colby management is now reviewing the division for purposes of recognizing an impairment. Illustration lists the Print division's net assets, including the associated goodwill of $900,000. Colby determines that the fair value of Print division is $2.8 million. This exceeds the carrying amount. Therefore, they do not recognize impairment. However, what if the fair value was determined to be $1.9 million? Oops. Therefore, there's impairment loss. The impairment loss is the fair value minus the net assets. Therefore, there's a $500,000 loss. So that means you increase your loss and impairment and decrease goodwill by $500,000. Similar to other indefinite life intangibles, companies may instead perform an optional qualitative assessment to determine whether it is more likely than not that goodwill is impaired. If the optional qualitative assessment indicates that the fair value of the reporting unit is more likely than not to be greater than the carrying value, the company need not continue with the fair value impairment test. Summarizes. Okay. I read up. The presentation of intangible assets I wish there was a function on your phone to alert you when you have fully charged your phone, because otherwise I would have to be constantly checking my phone to make sure it's charged. Like, come on, man. It's an app? You have to get a third-party app. Well, there's a third-party app that exists. Maybe I should get that. There's a way to do it without a third-party app. It says it's missing. Well, apparently there's a way to do it. Get battery full alert on Samsung Galaxy. All right. Step 1. Open settings on your Samsung Galaxy phone. Step 2. Go to advanced features. First. What? Where's that? Oh. So yeah, this is pretty unintuitive to find this. Bixby routines. Okay, make sure Bixby 2 routines is enabled. What? I don't even see it here. No! Not cool. Not cool. It doesn't even show, it doesn't even have it here. There's no Bixby routines here. Bixby. Maybe it's because I haven't enabled it yet or something. I can't even type it. Dude! I don't have it there. This is dumb. How do you not have it? Maybe it's under a different setting. How is Bixby not here? How? Does this phone not have Bixby on it? Seriously? Oh my gosh. Seriously? I don't think this phone has a Bixby function on it. Maybe it's just because it's a... Maybe they show an alternative. Dang, that's complicated. Oh. Third-party app. Well, full battery charge alarm. I just searched full battery alarm. There's an ad with this one with 4.8 stars. The ad has the best reviews. Unfortunately. Kind of unfortunate. What if I just installed the wrong app? It's fine. Stop. Because then I would have to constantly check my phone to see if it's fully charged. Because, like, it's so annoying. Okay, battery saver. Battery saver. Um, alarm when fully charged. Hello? I'm trying to find it. Ah, here we go. Okay. Dude, there's no full charge reminder? Are you kidding me? That's the entire reason why I installed the app. Well, I don't think this is gonna work. This is stupid. It's kind of nice having the information of like how long is it going to take to charge. It says it's going to take another 48 minutes. Funny. Anyways, that was just a massive waste of time. Oh, jeez. The reporting of intangible assets is similar to the reporting of property, plant, and equipment. However, contra accounts are not normally shown for intangibles on the balance sheet. As the illustration shows on the balance sheet, companies should report as a separate item all intangible assets other than goodwill. If goodwill is present, companies should report it separately. The FASB concluded that since goodwill and other intangible assets differ significantly from other types of assets, such disclosure benefits users of the balance sheet. It's too tiny, I can't see it. Really? Balance sheet. We got intangible assets and goodwill. Goodwill is separate from everything else. Intangible assets are separate. Income statement. As part of continuing operations, amortization expense, impairment losses, goodwill. Notes. More details are disclosed in the notes. On the income statement, companies should present amortization expense. And impairment losses for intangible assets other than goodwill separately and as part of continuing operations. Goodwill impairment losses should also be presented as a separate line in the continuing operations section unless the goodwill impairment is associated with the discontinued operation. The notes to the financial statements should include information about acquired intangible assets, including the aggregate amortization expense for each of the succeeding 5 years. If separate accumulated amortization accounts are not used, accumulated amortization should be disclosed in the notes. Notes should include information about changes in the carrying amount of goodwill during the period. Research and development costs. Research and development costs are not in themselves intangible assets. However, we present the accounting for R&D costs here because R&D activities frequently result in the development of patents or copyrights, such as a new product, process, idea, formula, composition, or literary work that may provide future value. Many companies spend considerable sums on research and development. Illustration shows the outlays for R&D made. Well, this is a good time to stuff. Stop. Unfortunately, I don't like how there's always a notification there for that, so maybe I should just get rid of that notification. That's annoying, you know? I don't want any notifications. All I want is a notification that my phone is fully charged. That's it. That's the only one I want. Dude, I don't think this app has the thing I was even looking for. I was looking for just all I want is one single notification that plays when the phone is fully charged. So that I can be like, oh, it's fully charged. I can now unplug the phone. That's it. That's all I want. Okay. Maybe the top app that I just downloaded doesn't have that really. Doesn't really have that. Maybe I should just uninstall it. It literally says it's going to take 55 minutes to charge. Even though okay. I'm just going to uninstall the app, and I'm going to Google what's the best app that just has that feature. That's it. Alarm for when phone is fully charged. Android. I mean, that's an app. I'll just get full battery charge alarm. I'm just going to get that because I don't care. Full battery charge alarm. It has 4.5 stars. Wait, what if it's not the right app? It's 4.5 stars. It's this one. Install. Open. Enable alarm. Yay! Let's preview the alarm. Full battery alarm. I would like to use a different... I don't care. I'm just going to leave it. It should go off even though I closed the app. It should go off. I shouldn't need to keep the app open all the time. Oh my gosh, please tell me I don't need that notification there. Yeah, fine. Gotta be kidding me, man. Why do I have to keep that there all the time? I hate that. You don't have to have it there when it's charging. Why? Because whenever I have a notification on my phone, I always look to see what it is. Now, whenever I see that notification, I'm like, oh, do I have a notification? No, I don't. Man, just why do people not know how to make apps that do the simplest things? In fact, it shouldn't even have to be an app. It should just be a third party. It should just be a default feature of a phone that it automatically lets you know when your phone is done charging. Duh. How is that not the most obvious thing to add? I mean, I wouldn't care if it wasn't the fact that apparently if you leave your phone charged for too long, it reduces battery life. Well, I don't care. Identifying the costs associated with particular activities, projects, or achievements. Determining the magnitude of the future benefits and length of time over which such benefits may be realized. Because of these latter uncertainties, the FASB has simplified the accounting practice in this area. Companies must expense all research and development costs when incurred. Identifying R&D activities. The illustration shows the definitions for research activities and development activities. These definitions differentiate research and development costs from other similar costs. Research activities. Planned search or critical investigation aimed at discovery of new knowledge. Examples: laboratory research aimed at the discovery of new knowledge, searching for applications of new research findings. Development activities, translation of research findings or other knowledge into a plan or design for a new product or process, or for a significant improvement to an existing product or process, whether intended for sale or use. Examples: conceptual formulation and design of possible product or process alternatives, construction of prototypes and operation of pilot plants. R&D activities do not include routine or periodic alterations to existing products, production lines, manufacturing processes, and other ongoing operations, even though these alterations may represent improvements. For example, routine ongoing efforts to refine, enrich, or improve the qualities of an existing product are not considered R&D activities. Accounting for R&D activities. The costs associated with R&D activities and the accounting treatments according to them are as follows. Materials, equipment, and facilities expense the entire costs unless the items have alternative future uses in other R&D projects or otherwise. If there are alternative future uses, carry the items as inventory and allocate as consumed, or capitalize and depreciate as used. Personnel expense as incurred. Personnel expense as incurred. Salaries, wages, and other related costs of personnel engaged in R&D. Purchased intangibles, recognize and measure that fair value. After initial recognition, account for it in accordance with their nature as either limited life or indefinite life intangibles, contract services, expense the cost by others in connection with the R&D as incurred. Indirect costs include a reasonable allocation of indirect costs in R&D costs except for general and administrative costs, which must be clearly related in order to be included in R&D consistent with item 1 above. If a company owns a research facility that conducts R&D activities and that has alternative future uses in other R&D projects, or otherwise, it should capitalize the facility as an operational asset. The company accounts for depreciation and other costs related to such research facilities as R&D expenses. To illustrate, assume that Next Century Incorporated develops, produces, and markets laser machines for medical, industrial, and defense uses. Illustration lists the types of expenditures related to its laser machine activities, along with the recommended accounting treatment. Construction of long-range research facility for use in current and future projects. Capitalize and depreciate as R&D expense. Rationale has alternative future use. This is a very nice table, actually. Acquisition of R&D equipment. For use on current project only. Capitalize. What? What? It says has a... Oh, never mind. This is not lined up properly. Hello? You didn't line this up properly. That's why I was confused. This matches with this. Gotta be kidding me. You messed up. You messed up, textbook. This is supposed to be with this. This goes with this. This goes with this. This goes with this. You should have lined them up. Stupid, idiotic book. Expensed. Acquisition of machinery for use on current and future has alternative future use. You will have inventory. What? I hate this. Again, this goes with this. Oh my gosh. Purchase of materials for use on the current and future projects. Inventory allocates R&D projects expenses consumed. Salaries of research staff is expensed. Research costs incurred under contracts. Receivable. What? I'm confused. This is the worst table ever because of the visual mistake that they made, where they made it not match. Come on. Come on. Here. Does this go with this one? Does this go with this? This goes with this. 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 So this is 6. I don't get how that's a receivable. That makes no sense to me. How is that a receivable? Hello? This makes no sense. How is that a receivable? You know what? I don't care anymore. Costs similar to R&D. Startup costs for a new operation. Initial operating costs. Advertising costs. Computer software costs. Startup costs. Startup costs are incurred for one-time activities to start a new operation. Examples include opening a new plant, introducing a new product or service, conducting business in a new territory. Startup costs include organizational costs, such as legal and state fees, incurred to organize a new business entity. The accounting for startup costs is straightforward. Expense startup costs as incurred. So we have travel related costs, costs related to employee salaries, costs related to feasibility studies, accounting, tax, and government affairs. A training of local employees related to product maintenance, computer systems, finance, and operations. Recruiting, organizing, training related to establishing a distribution network. All of these are expensed. Additional operating losses. Advertising cost. Over the years, how about advertising? Yeah, but I thought you expense advertising costs. Disclosing financial statements generally in the notes the total R&D costs charged to expense each period for which they present an income statement. Report both internal and acquired research and development in its recent income statement. We have a statement of income, costs, oh, research and development is included as an expense. We have 10,000, 10,000, and 6,000. In addition, they provide a discussion research and development. Wow. Oh, wow. That took so long. That took such a long time. It took an hour and 48 minutes. Actually, that's not that long to read the chapter. I don't know. Sunday? Of course, we have two things due on Sunday again. Come on, can you please stop? Oh. Let's see. Crap, I want to see how long this takes. That was funny. Last time it took me 13 minutes. Let's see how long this takes. The science professors at Oakland University are internationally known for their research as well as their teaching and mentoring abilities. To the university, the knowledge and experience of their professors would be considered short, long-term, intangible assets. Which of the following is a correct statement about intangible assets? Intangible assets are normally classified. Intangible assets derive their value from the rights and privileges granted to the company using them. On April 30th, they exchanged 10,000 shares at 25 per value for a patent. Okay. So it's going to be the fair value, I believe. So it's going to be like $43,000, right? Chloe Tate has recently entered into an agreement with Lindbergh Industries. Chloe will sell all of her products using the trade name. That would be a franchise. Oh, come on. Okay, this is a marketing related. Oh. No, this is a contract. I forgot what they classified it as. It's got to be a contract. It's got to. Yeah. I just memorized the fact that that's a franchise. I didn't memorize whether it's a marketing or a contract or whatever. But anyways. But the assets. Okay, there's a $1 billion difference between fair value and the purchase price as goodwill. Hold on. Hold up. Oh, come on. I don't know if it was purchased at a loss or a gain. Wait, hold on. Okay, $2 million was the purchase price. Oh. No! It literally just rolled all the way to the other side of the room. No, it rolled. Oh, I thought it rolled under the couch, but it actually just rolled to the other side. Yeah, this is going to take longer than 15 minutes now, isn't it? It's taking way too long. I have to do math. Okay. 2.52. So 3.6. So $3 million. They bought it for $2 million. It was really worth $3 million. So therefore, they bought it as a gain. This should be a gain, not goodwill. Okay. True. Oh, come on. Why do we keep giving us math questions? What are we trying to do here? The oil extraction patents should be carried at the amount of what? 6.25 million. I don't feel like doing a bunch of math right now. Gotta be kidding me, dude. One year later, it's gonna be minus 0.625. No, this is 2 years later. 2 years have passed. 6. Okay, the carrying amount right now should be at 5 million. So they expect we have 5 million 750 times 8. Oh, no, they say the present value. You gotta be kidding me. Is the present value um no, okay, what you do is 750 times 8. Their expected cash flows is 6 million, more than this, so therefore 5 million. No, stop giving me math questions. I thought this whole chapter would be conceptual stuff, but no, it's not. Okay, but it's 1 year later. The division has a fair value of 7.8 million. Are you kidding me? What is this? Great. Great. Uh, I'm going to just use this number. So 1.2. What? You do 7.8 minus 6.8? Oh. Then they did 2.5 minus 1 equals 1.5? What? What is going on here? You know what? I'm not even going to bother with this. I don't care. 1.5 million. I'll just memorize that. That's the answer. This is going to be development. Research and development costs may include I didn't even have to do it again. Okay. That took forever. That took 10 minutes! Well, the reading took forever, but at the same time, it took less than 2 hours, so maybe not. Oh.